Get some. Good morning, Melonheads. Happy Inflation Day. That time of month when our benevolent government overlords love to understate just how much more expensive our stuff is getting. Today, I think they're going to understate it even more. So we got some big changes to our CPI calculation coming today. They snuck a little note in the Bureau of Labor Statistics website that says they are changing the way they calculate the weighting of all of the topics. And they're going to be using 2019 and 2020 spending data from households in order to inform just how much each category counts towards the overall CPI. And I don't know if you can recall, but 2020 was something of an unusual year for most households, wasn't it? Did you spend much money on gasoline in 2020? I didn't. Did you take many vacations? Did you take many flights? Did you stay in many hotels? Did you go to the doctor very often? A lot of things people did a lot less of in 2020, and a lot of things people did a lot more of in 2020. And something tells me that the net effect of this change in the calculation is going to be to lower the CPI index. What tells me that? History. Because every time they change their methodology, CPI goes down. Because the government is financially incentivized to do that. Because the CPI is used to inform cost of living adjustments for food stamps, for veterans benefits, for Social Security, and who knows what else is out there. So the government is financially incentivized to understate this. And my goodness, it is only 8:17 a.m. Eastern Time. It is way too early to me, and I am just looking at all of you guys in the comments here. I don't know what you guys are thinking being up this early. I have to be. What's your excuse? I see Mish, the moderator, is in the comments. Good morning, sir. I got Fred. I've got Arian Arabi. Hello, sir. What is the delay on the stream? I think we are only delayed by about 4 or 5 seconds. Got Sean Mattingly. I've got my first Mattingly. True story, Don Mattingly was my idol when I was a kid. He's the reason I played first base in baseball. So still have my 1984 Topps Don Mattingly rookie. It's my favorite baseball card. I bought it with my birthday money when I was 8, I think. A long time ago. But anyways, welcome, Steve Mattingly. Steve. I've got Steve Woitus, Andrew Bartlett, Waka Waka, Fozzie Bear in the house. Real inflation is over 15%. That's right, Waka Waka. And I talked about that in my preview video yesterday. There is a website called shadowstats.com. I highly recommend you check that out. It's done by a guy named John Williams. No, not the composer from the Star Wars theme. I can see how you might mistake that. But what they do is they consistently calculate CPI using the 1980 and the 1990 methodology. And using the methodology from 1980, inflation based on last month's read would actually have been 15% and a tie for an all-time high. Of course, they changed the methodology over the years. As they're about to change it again, they're going to lower the weighting. We are now 11 minutes away from the CPI release, and I think that's probably a good time to shrink my big fat melon of a head. Hold on. I said shrink my big fat melon of a head. Where are you, melon head? What is going on here? Oh, my goodness. Folks, I am off my game this morning. I did not bring my A game today. I apologize. All right. First, let's look at the oil chart while we're here. All right. And I think this is going to have a pretty big input based on last month's number. Last month, the energy index overall was up 33%. It was one of the biggest contributors to the big spike in inflation last month. But if you recall, on Black Friday, when we had that new health scare, we saw a big dip in oil prices conveniently right at the end of November, and that energy prices, this is across the board, but particularly oil and gasoline, spent most of the month of December well below where they were in November. So we're going to have a much smaller energy input to CPI this month. We will have a negative month-over-month number, and then a smaller but still positive year-over-year number. And that should have the effect of dragging CPI down. Again, there's that big asterisk. We don't know what the change in weighting is going to do. What it may do, I'm assuming based on 2020 expenditures that energy is going to be a much smaller contributor to CPI weighting going forward, at least until they change the methodology again. So that's the biggest change I'm expecting is energy. And of course, the big one that's always out there, folks, is rent. I've been beating on this drum for months now. The government so dramatically understates rental increases. I mean, if you're on here, if you're a renter, what has your rent gone up by this year? I mean, I've seen 80%, 60% numbers. I did my preview video yesterday, and I brought up this website here. Let's make sure you guys can see all right. Here, let's move me over here. This is the Apartment Guide 2021 Rent Report, which includes data through December. And right here, they're talking about a one-bedroom apartment, national average, up 21.3% last year. A two-bedroom apartment, on average, up 16.7% last year. And right now, the CPI for the month of November said the rent had increased 3.8%. Picking up something of a disconnect there, aren't we? A little bit different. And owner's equivalent rent, at least using the methodology from last month, counts for almost 24% of the whole CPI index. It's almost a quarter of the whole number is that one statistic, owner's equivalent rent. And I had somebody call me up, or not call me up, but they asked me in the comments yesterday, maybe they're looking at the data differently. Maybe they do a certain weighting this way. The way they calculate owner's equivalent rent, folks, I kid you not, they pick up the phone, they call a homeowner, and they say, how much would you rent your house for, unfurnished? And then the homeowner just answers the question, and they say, thank you, have a nice day, and they hang up the phone. And they do that a couple thousand times in a couple of cities across the country. That is their scientific method for calculating owner's equivalent rent. They could just actually look at, what it costs per square foot and the average of a couple of cities. No, they pick up the phone and they ask people, in your opinion, what would you rent your house for? And you could go by leases signed. I mean, leases are legal documents. There's ways to get more accurate data, and owner's equivalent rent is just the mother of all baloney government statistics, and it's the single most important input to CPI, and CPI is the single most important input to the cost of living adjustments for a lot of people who are dependent on government programs. So it's amazing how much rides on somebody answering the phone and saying, I'd rent my house for, I don't know, this amount. But that's the way it goes. So, and again, just looking here, this chart is showing by state the average rent increase for November. And look at Oregon, 58.8% year over year change. And every single state in the union had an increase except for lonely Nebraska right there in the middle. For whatever reason, the average rent in Nebraska was down 2%. And I didn't see anybody in the comments mention it, but I have a call to action for all you Nebraskans out there. What is going on in Nebraska? Why is the rent going down in Nebraska? And how do we get their problems? Because the rent sure as heck is not going down where I am. Anyways, guys, let's check. This is the CPI website here. This is bls.gov/CPI, and this is where the update will be posted. It'll appear right here in the lower left at 8:30. They're usually right on the money with the release, so we are 6 minutes away. Let's see a couple of the comments we have here. Guys, the comments are awesome. They're rolling in right now faster than I can read them, so if I don't read your comment, please don't take offense. I try to get to as many as I can. There are just too many of you guys. I love that, by the way. It's a great problem to have. Do not slow down the comments. Keep them coming. I've got Silver Treasures, 3-bedroom, 2-bath house. My rent went from $1,100 to $1,150 to cover increase in property taxes. Silver Treasures, I think you've got an awesome landlord, by the way. If he only raised your rent $50, and that's not to diminish any difficulty that may have put on you, your monthly expenses going up. But I know a lot of landlords are raising a lot more than that. So if you got through 2021 with a $50 rent increase, consider yourself coming out ahead of the game right now. And to cover an increase in property taxes, I can tell you my mortgage payment went up over $100 a month because of an increase in property taxes. So I pay my property taxes through the through my escrow with my mortgage. Buy silver and platinum. They are not lies. Neil Hahn, that is an excellent idea. I love the shinies. I like platinum also, although I am certainly partial to silver. And if you've been following me for any amount of time, you already knew that. Alan Coughlin says rent should cool in the second half of 22. Record number of apartments under construction. I did not know that. I we could certainly use it if rent is going to cool in the second half of 2022. Right now, I think one of the big things driving rents is, believe it or not, the bond market. There's just no yield to be had out there because the Fed has held interest rates so low for so long that a lot of wealth managers like BlackRock, Vanguard, they can't go to the bond market for reliable income anymore. So they're buying houses and they're renting them out for yield. So that's having the effect of taking dollars that would normally go into the bond market, and instead those dollars are adding fuel or adding air to the housing bubble, driving up prices. And when home prices go up, rents go up with them. So I think these higher interest rates will have the doubling effect in lowering housing prices, in that, number one, they'll make the payments less affordable. Interest rates go up, mortgage payments go up, so people can afford less house for the same monthly payment. But number two, we may see some of that money right now that's piling into the housing market chasing yield may go back to the bond market where it naturally wants to be. So I agree, we should see rents and home prices cool in the second half of 2022, and that's independent of the new apartments under construction. I didn't know there was a record number of apartments under construction, but that certainly will help. The market needs new supply also. Excellent comment, Alan Coughlin. Thank you and welcome. Let's see. Let's go, says Max Frost. Yes, sir. Hello, Robin RC Models. There are three kinds of lies: lies, damn lies, and statistics. That's right. Thank you, Samuel Clemens, a.k.a. Mark Twain, for that. And we are 3 minutes away from the CPI number, folks. 3 minutes. Mish, you're not a fan of Nebraska, huh? The moderator does not approve of Nebraska. By the way, folks, while we were here, you may notice the little blue wrench next to Mish's name. And that Mish's name in blue is because that is my new moderator. He's going to be helping us out on the channel. So please welcome Mish. Thank you very much, sir, for your input. He's going to be helping out the channel. I met Mish at the Denver meetup along with the Economic Ninja and a lot of great other YouTubers. I had a blast in Denver. It was an awesome time. So welcome to our new moderator. And we are now 2 minutes away. Hello from Sydney, Australia. It's 12:30 a.m. here. Wow, YouTube account. Rock and roll, man. Up at midnight to watch the CPI release. That's how it's done in Australia right there. Well, welcome, sir, and thank you for humbling me with your time. Silver Treasures is in Michigan. All right. Hello, Cole Marsh. Welcome, sir. My landlord is awesome. I tell you, a good landlord, or as a landlord, a good tenant is really hard to find. And I mean, I was a landlord before. I'm not right now. I've sold all my rentals. But a good tenant, you have no idea how valuable a good tenant is, or conversely, just how destructive to wealth a lousy tenant could be. So I can see rents not going up when you have a good tenant-landlord relationship. Hang on to that, man, because boy, it is tough when those aren't there. And Robin RC Models, Mike, sir, thank you very much for the super chat, for supporting the channel. We've got, with population aging, it's going to be very interesting who's going to own all the real estate, at least here in Europe. You know, you're going to see that effect, Mike, in a lot of real estate markets, because as people age, they tend to exit the real estate market. I mean, they still need a place to live, but they tend to downsize the single-family homes, and they go to more multifamily or assisted living. Certainly in China, the aging population and the population collapse is a big input to what's going on in the Chinese real estate market right now. We're definitely going to see that in Europe, and we're definitely going to see that in the U.S. So you have to watch the birth rate. I mean, if you see a big birth rate 25 years ago, a big drop in birth rate 25 years ago, that's going to translate into fewer new households being formed today, which is going to mean an impact on the housing market. So aging population is not good for the housing market. Definitely not. And thank you again, Mike, for the super chat and for supporting the channel. And it's 8:30. Let's see if we're here. No, we still have not updated. We are going to refresh and refresh until we get our number. And we ain't going home till we get our CPI number. Still not there. Great time in Denver, says Mish. Yes, sir, it was a great time. Hello, Jason Casale. Rev, I don't know what we've got there. If not 3.8 this month, then a higher number to futilely try to give the new equation credibility, and then 3.8 next month. I'm going to say the number probably comes in lower. I shouldn't have made a prediction. There it is. Okay, CPI for all items rises 0.5% in December. Shelter. Where is it? Oh, I lost it already. Here we go. Let's make sure you guys can see, and we will go through this report together, and you can. The Consumer Price Index for all urban consumers, or CPIU, increased 0.5% in December on a seasonally adjusted basis after rising 0.8% in November, says the U.S. Bureau of Labor Statistics. Over the last 12 months, the all items index increased 7.0% before seasonal adjustment. We got a bigger read. Wow. I did not see that coming. Now, I knew inflation got bigger, but I did not think the year-over-year number would increase, especially not with that change to the methodology. 7%, folks. We got that 7 handle. Wowza. I did not see that coming. So congratulations. If you said 7, and there was somebody in my post yesterday who said 7.0, I can't remember who it was, but congratulations, whoever you were, you nailed it. Increases in the indexes for shelter and for used cars and trucks were the largest contributors to seasonally adjusted all items increase. So there you go, shelter, the owner's equivalent rent, finally starting to react. The food index also contributed, although it increased less than in recent months, rising 0.5% in December. The energy index declined in December. We saw that coming, ending a long series of increases. It fell 0.4% as the indexes for gasoline and natural gas both decreased. Index for all items, less food and energy, because people don't need to eat and heat, right? That rose 0.6% in December, following a 0.5% increase in November. This was the 6th time in the last 9 months that it's increased at 0.5% at least. Along with the indexes for shelter and for used cars and trucks, the indexes for household furnishings and operations, apparel, new vehicles, and medical care all increased in December. As in November, the indexes for motor vehicle insurance and recreation were among the few to decline over the month. The all items index rose 7% for the 12 months ending December, the largest 12-month increase since the period ending June 1982. We've got the highest read in 40 years, since I was but a wee lad at the age of 2. The all items less food and energy index rose 5.5%, the largest 12-month change since the period ending February 1991. Energy index rose 29.3% over the last year, and the food index increased 6.3%. So there was a lot going on there. A lot of those things were expected, but I got to tell you, that headline number, that 7%, that took me by surprise. I was genuinely expecting a smaller headline number than that, a smaller year over year. Wow, I'm really shocked to see that. Let's see a little bit here. Here we break it down by category. Food, we've got a 0.5% December number. If you watched my preview video yesterday, I was actually expecting a slightly negative number for food. So we did get a lower number than we had in December, although we didn't get the negative number I was expecting. And then 6.3% year over year. Again, though, I'm gonna say that's probably overstated, because has your grocery bill gone up by just 6%, or has your grocery bill gone up a lot more than that? I mean, the price of meat has sure gone up a whole heck of a lot more than 6.3%. Food away from home, that's your restaurants. We've got 0.4% month over month, 6.5% year over year. The energy index. So we talked about this. There's those negative month over month numbers for energy, right? That's after the Black Friday sell off in oil and all the other energies. So, excuse me. So as expected, we got a negative month over month number and then a smaller year over year number. We were looking at 33% last month for the year over year number, now down to 29.3%. So energy, a less of an input. Now, one thing I want to mention, that number is going to come right back up next month, because oil, gasoline, now higher than they were before the Black Friday crash. And as my friend Nicole Post pointed out in the comments earlier, natural gas had a nice night last night because we've got cold weather heading for the Northeast U.S., and I think that is going to drive up natural gas prices. Now, the one I want to see, where is my shelter number? Let's see if shelter is finally reacting. Not really. Not really. It's still way understated. Shelter, we've got a 0.4% month over month change and a 4.1% year over year. And again, 4.1, folks, that number, I've said it before, it is due. The rent is going up a whole heck of a lot faster than 4.1% year over year. So even though that number is ticking up, the owner's equivalent rent statistic has continued to rise month over month consistently. It's still way, way understated. And if we were to normalize these numbers right now, we would need a very big, sudden spike in order to get right with the statistics, and that would take this whole index a lot higher. I would not be surprised to see some combination of increasing owner's equivalent rent at the same time they decrease the weighting in the index using these new calculation methods to try to offset that impact or try to blunt the shock of the housing market hitting things. So overall, not too many surprises in there, at least not in the granular, at the smaller levels. But again, the headline number, that 7%, it really took me by surprise. Let's see if the market is reacting to this. This is the all-important 10-year Treasury yield chart. I've been showing this chart quite a bit. And remember this purple line, folks. This is the pain tolerance for the U.S. economy. This is the maximum sustainable interest rate that the economy can afford before something in the economy breaks and the stock market crashes. And we have really, zooming in here to the beginning of the year, we're heading towards that line fast. When we hit that line, or if we go just above it, like in December of 2018, something's going to break. Don't know what it is. It's impossible to predict, but something will break. And we are heading that way, although right now it looks like interest rates have ticked down just a little bit on this news. Let's look at the Yahoo Finance headlines. Right now, stock futures are up. Although no big changes. Stocks appear to like this number. That's interesting. Yeah, I mean, just looking right now, this is the Dow futures. They appear to be heading up on this news. This is delayed by a few minutes. And also keep in mind that the initial reactions, those are purely algorithm driven. The algo looks for certain data points. It's software that scans the report and then instantly starts making millions of trades based on it. So the algos have been known to get it wrong, and we have been known to see very rapid reversals in the initial market reactions to these reports. So I like to just kind of sit back and watch, at least for the first few hours, when these CPI numbers come out, because the computers just make a mess of things. Gold and silver appear to like this news, okay, as it should. I mean, in a perfect world, higher interest rates, in a perfect world, higher inflation means gold and silver head higher, right? But in our world of rigged markets, sometimes higher inflation rates spooks the market, and they say, oh, the Fed is going to tighten, and that's going to be bad for gold and silver. That's not a free market approach, but that's how it works sometimes. But it looks like for right now, the market seems to like the higher inflation numbers. 10-year down a little bit. The VIX down a little bit. Bitcoin had a good night, up a little bit. All right, so let's see. Has oil reacted? Let's get out of this technical chart. Oil's not really reacting too much to this. No big change here. So overall, seems like a pretty tame reaction to the market to this inflation number. But that 7 handle, that's a psychological threshold there, because when we were in the high 6s, that's one thing. Now that we got that 7 handle, maybe it's a little bit of a shock to people. Again, that number is still understated. I think the actual number, somebody mentioned in the comments earlier that the actual number is really 15. So we're now going to be higher than 15. Anyways, let's get to a little bit more comments. Here's Mike, Robin RC Models. See, there goes my Bitcoin long, up 2.5% in 10 minutes. I said go long 100x. Well, good call, sir. Congratulations on your gains. Crypto, I don't know. I don't want to jinx it. I've said this once already this year, and I was wrong the last time I said it, but I think we are probably headed for crypto winter. I think we're probably in for the doldrums in between spikes in the crypto chart. But I am still dollar cost averaging into Bitcoin, and I still mine Ethereum because I think in the next halving cycle, which is due in 2024, I think we're going to get another one of those big parabolic moves. And then we have another halving again in 2028. And I stick by my original thesis. By the end of this decade, Bitcoin will be over $1 million US. And that is independent of hyperinflation. That's just based on the deflationary aspect and the halving cycles and new money entering the crypto space. Mish says, nobody special. Check silver contract. All right, let's see what silver is doing. Let's bring up the metals. And here is our silver. Looks like we're up 0.76%. Let's put on the candles. I prefer a candle chart. So initially, wow, market likes the inflation report. Silver broke over $23 an ounce. Congratulations to my silverbacks out there. Again, we've got a long way to go in silver. Also, I would point out that registered number keeps getting smaller. Ground's getting closer, COMEX. We were down, the last I looked, we were at 81.5 million ounces in the registered category. I haven't seen another update since. But that's down from about 156 million at the start of Silver Squeeze. So we are draining the COMEX. We are having the desired effect on target. It's just taking a little longer than a lot of us would have preferred, myself included. So that is excellent, Mish. That was a good idea. Thank you, sir, for suggesting the silver contract. While we're at it, let's look at gold, which, although I prefer silver, gold is a better indicator of the market's sentiment towards the inflation number, and gold likes it too, back above 1,800. Nice move in gold to 1,824. Again, we're just getting started here. I don't like to trade on the inflation numbers because this is all algorithm driven right now. And a lot could happen over the next few hours. Let's see what we've got. Bitcoin going to bankrupt people, says Neil Hahn. I have seen a lot of people say that. I am not among them, Neil. I understand a lot of people are not big fans of the crypto space. I wish the crypto and the precious metal people would get along better. I really do. I think we got a lot in common, but hey. Peter Schiff kind of gets on my nerves with that. Peter Schiff is so anti-crypto, so anti-Bitcoin. I get it. You like gold. Doesn't mean you have to hate everything else. I just throw them out there. You guys do what you want with them. I just throw them out there. Hedonic adjustments only go one way, says Rev something Redux I cannot pronounce. But yes, hedonic adjustments, which, note to self, Google hedonic. I'm not entirely sure what that means. But I do know it's something pertaining to the changes of people's spending patterns over time. Gotta learn that one. But yeah, they always tend to lower it. CPI equals 7% and market futures are up, Steve White says. That's right. I was a little surprised that the market is reacting positively to that. Maybe the market was expecting a bigger number than 7%. I was not expecting bigger than 7, I admit. Copper's up 3.25% today, says the Robert So Nice. He named himself twice. So tether ties to Evergrande do not mean anything. This is why the economy is going to crash. Oh, I agree. If Tether is tied to Evergrande, I don't know that for sure. I suspect it is, but we don't know that yet. If Tether is tied to Evergrande, we may find out soon. And again, if Tether is tied to Evergrande, if Tether goes belly up because of the situation in China, I think we will see a 50 to 80% sell-off across the board in crypto. But it would not change my overall thesis of where it goes in the long run. Although I'm not on leverage, I haven't borrowed money to buy crypto, so it doesn't affect me that way. Cheshire Yeoman says, nobody special finance. Gold is dropping like a stone in British pounds because the U.S. dollar is gaining on the pound. That's interesting. The Forex market is certainly a big input to gold. And again, that's your algorithms, buying and selling back and forth. You're going to get a lot of that early on. Cole Marsh can't hide crypto. Mish says, I get along with the analyst. Yes, the analyst was another YouTuber I met over in Denver. And the analyst, he's a very crypto-intensive channel. Which, by the way, if crypto is your thing, I highly recommend you check out the analyst and subscribe to him. I recorded a couple of videos with him in Denver, and I'll be posting them over the next few days. I got a lot of content shot in Denver. I think I did 11 or 12 videos. So I'll be rolling those out slowly over the next few weeks. It was a good time. Met a lot of really cool people from all over the country. A lot of people flew. A guy from Michigan, guys from California. I met somebody who grew up about 2 miles from where I live now. A lot of people from Arizona. A couple of guys from Wyoming drove down. So it was a good time. There's a 1 hour gap for markets open, so it's just a misdirection rally before bloody red, says Trevor. Trevor, you may be right about that. That's why I said I don't like to trade based on the initial reaction to these reports. I like to sit back and wait for a little while, let the algos do what they're going to do, because I'm certainly not going to stand in front of them. Do I expect the market to like this data overall? It's a hard call. If we were in a free market, I would say the market would not like this data, because higher inflation equals higher interest rates, markets go down. But again, when you view everything through the lens of what does this make the Fed want to do, because we have a rigged market, and we don't even pretend that we don't have a rigged market, right? The Fed rigs the market. They rig the bond market. They rig the stock market. They rig the housing market. Through their price controls on dollars, they rig all markets. So it's all about what does the Fed feel compelled to do. And you're talking about people's opinions and people's emotions. I'm more comfortable with charts. I can more easily predict charts than that. Just looking right here in the gold numbers, again, here's why we don't trade right away based on these reports. Big green candle, and looks like we have a bigger red candle developing. So again, you're going to have a lot of volatility here. Silver Treasure says the USD chart looks like a falling knife. Yeah. Let's just see here. Let's refresh Yahoo Finance and see what we get. Stock futures still up. Russell is up. Crude is up. Crude up almost $1 now, $82 a barrel. That will certainly bode well for my XLE call options, which are up about 160% as of close yesterday. So those will probably be a little higher. The euro rallying on the dollar. Silver and gold still like it. The 10 years kind of holding still. Not much change in the bond market right now. So overall, I would say the market's reaction is a little tame right now. And I think that is about it, folks. Let's see a couple more of these comments here. Dixie's not having a good time. I would not expect it to. Really appreciate your taking up with CPI BS this early in this morning. I mean, it's not even worth anymore to debunk their made-up figures. Look at prices in markets. They don't tell you all is okay. I agree, Mike. I really wish the government wouldn't play games with the statistics. You know, as the saying goes, garbage in, garbage out. If you keep messing with your statistics over time, then it's impossible to make any accurate inferences based on the trends. But again, the government is financially incentivized to understate CPI, because if they were to give us the true cost of inflation, then they would have to increase payouts to things like pensioners, payouts to Social Security, payouts to food stamps, right? All these basic assistance programs and all these retiree and fixed income programs would have to rise along with CPI if they told the truth or if they were more accurate in their reporting. And the government can't afford that. So what's the net effect? If inflation goes up higher than people's cost of living adjustment goes up, that means lower income folks in particular feel the brunt of the inflation. And who benefits? The people who are most leveraged to the asset bubbles that increase in value with inflation, i.e. the wealthiest. So the government's underreporting of CPI is absolutely a direct input to the wealth disparity among rich and poor in the United States. Absolutely. I've been saying it for months. You fix the money. Fix the money, folks. You fix so many of society's problems. All these things that we bicker about and that we fight with our friends and family and neighbors about. All these silly political arguments. You fix the money. They just go away. They don't go away, but they become so much less of a problem. So anyways, I'm on my soapbox. I got to get right off that soapbox. I'm going to get right off of that. Dollar is going to zero, but will become SDR, imaginary dollar instead. Then the global rigged market will collapse. Yeah, I'm guessing by SDR, we're talking about some kind of digital currency, right? CBDCs. I am not a fan of CBDCs. They're going to sell central bank digital currencies as if they were some kind of a innovative Fed Bitcoin. They are not. They are the anti-Bitcoin. Okay? Everything they tell you about CBDCs is a lie. They are going to program your money. They're going to use it to think about it this way. If you control the money and you control the base code of the money, and say you have an inflation problem, I can implement price controls just by programming the money. Because I can go say, Jack Gamble, your wallet, we have a problem. We have an oil crisis. So I'm going to program Jack Gamble's CBDC wallet so he can only buy 20 gallons of gasoline a month. Problem solved. I just controlled gasoline prices just by limiting what everybody's allowed to buy. How'd you like to get to the gas pump, try to buy gas, only to have Jerome Powell say, you bought too much gas this week. You can't have any more. Or say you bought too much chicken, or who knows what. Or say you make the personal choice to fill your lungs with smoke. Say you want to smoke cigarettes, all right? No. All right? It's your choice, your call. The government says, no, that's bad for your health. That's bad for our single-payer health care system. So we're not going to let your CBDC wallet buy those cigarettes anymore. Honestly, this is how you get that demolition man, bogus, nanny state garbage. So, man, I am right back on my soapbox. This is what happens when you guys let me go live before I have finished my first cup of coffee. You get this kind of rambling drivel from me. And I don't apologize for what I'm saying. Maybe I shouldn't be saying it this early in the morning. There's a lot of shorts at $23 being defended. All right, Mish, we're back on the silver chart. Let's see what is going on. Is this the BOFA squeeze? Is Bank of America defending their 800 million ounce silver short? Hashtag BOFA squeeze. Let's see. Well, they pushed us back under 23. Give me my candle chart. It looks like a little bit of a hammer. We may be rejecting that move lower. I wouldn't. 23 may still be in play. 23 again. Just sit back and watch, folks. I don't trade this news. I just sit back and watch. Just enjoy the show for right now. You don't want to get caught up between the algorithms after a report like this. Nothing good's going to come out of that. CBDC equals an increase in black markets, says Steve Whitus. I agree. You're going to see a lot more barter. You're going to see a lot of precious metals. It could be very good for actual crypto, not fake government crypto, but actual crypto. Although they have their growing pains, the networks need to get faster and cheaper. And there are things in the work, the Lightning Network and things like that are supposed to fix those problems. I still notice it's pretty expensive to move crypto around. I don't like eating those fees, but still better than watching your dollars lose 7%, officially really more like 15% a year. Crypto opens the door for CBDC. Thanks, crypto. Neil Hahn, not really. Not really. They're just using crypto as a diversion to get CBDCs, because everything they're doing with CBDC is so flies in the face of Satoshi's original vision of a decentralized distributed currency. It is the anti-Bitcoin. I mean, it's nothing like Bitcoin. There's nothing like real crypto. I mean, it's Tether, but instead of these private sector crooks, it's government crooks. So choose your crook. It's more Tether than it is Bitcoin. I'll say that. And again, when they need more of it, they'll just print it. When they want to do quantitative tightening, they'll reach into your account and they'll take it. If they want to control prices, they'll tell you what you're allowed to spend it on. They'll just take your taxes right away, right at the point of transaction. They'll tax you. So no more. Anyway, Cole Marsh is saying $24. I would be surprised to see 24, but I wouldn't rule it out. Again, we haven't seen the real reaction yet. This is just the algorithm's reaction. This is not the market's reaction. But you're right, CBDC is dystopian future we have seen in every cyberpunk movie. I wish I was wrong. Folks, we don't have CBDCs yet. We don't have to have CBDCs yet. They're just talking about it. They haven't done it. We still have representatives. We still have elected officials. So make your voice heard. And if you talk to people and they're like, oh, I heard about this CBDC thing, that's neat, don't tell them how bad this could really be. Tell them, do you want the government interrupting your transaction because you've bought too much food or you've bought too much fuel this month? Or do you want the government just reaching into your checking account and taking money from you directly because they have an inflation problem? And so they're going to take away your money, not their money. Can there be naked shorts on silver, or does the physical have to be allocated? Learning here, says Steve Whitus. Yes, there absolutely can be naked shorts on silver. I suspect there is a massive naked short position in silver, and it's very easy to do because so much of the silver market is settled in paper and so little actual metal changes hands. I suspect that silver is massively short. I mean, according to Ted Butler's article, Bank of America leased, or what he suspects is Bank of America may have leased 800 million ounces from JP Morgan and then sold them. That means Bank of America needs to go onto the open market and buy 800 million ounces of silver. We only ever mine about 1 billion ounces of silver a year. And right now, the whole COMEX registered category is only 81.5 million ounces. So Bank of America alone is short 10 times the float of what's on the COMEX. Is that not the definition of a naked short? Selling something that doesn't even exist? So yeah, absolutely, there are naked shorts in silver. Absolutely. And one day, that scheme is going to break. If you would have asked me a year ago, I would have told you it would have broken by now. So, the saying goes, markets can stay irrational longer than you can stay solvent. So maybe it goes on, maybe not. But absolutely naked shorting. Good question. They're using crypto as a liquidity mop. Imagine where we would be if they were not, says Jason Cassell. I've heard that story before that I don't buy it. I don't subscribe to that thought. I understand the theory behind it. The theory of the liquidity mop. The theory is that cryptocurrency is being used to attract money that would otherwise go into gold and silver. And while there certainly is some of that going on, if you're buying Bitcoin instead of buying gold and silver, then your head is in the wrong place, right? I buy Bitcoin on top of buying gold and silver, but I buy gold and silver to preserve wealth, to preserve capital from the decaying effects of inflation. I buy Bitcoin to get rich. I buy Bitcoin so it goes up in value. All right. One is a very speculative, very risky investment, and the other is the base of Exter's pyramid, the very definition of a safe investment. So the fact that there are people out there buying Bitcoin instead of gold or instead of silver, I don't doubt that there probably are, but those people are not big enough to move markets. I really don't think so, because they don't occupy the same space. They are two totally different trades. They have the one thing in common is that they are both something of an inflation hedge, but Bitcoin is way, way too volatile to be considered a safe haven asset. So I don't buy that Bitcoin is the liquidity mop that's soaking up money that would go into gold and silver. I can see how some people get there. I can't get to that point. I don't. Mark the Stump Grinder, sir. Mark Schwartz Stump Grinding says, thanks for what you do for us. Sir, thank you very much for your continued support of the channel. That was awesome. Thank you for the super chat. Guys, you guys are awesome. I love doing this. I want to keep doing this. So I think we're going to make these CPI release live streams a regular thing on this channel. What else we have here? How many rate hikes do you think there will be this year, since the number estimate seems to be very based on who you ask? Says Overstew. I would say if nothing bad happens, there will be 3 rate hikes this year. Okay, that's if nothing bad happens. If the market breaks, we won't get to that 3rd rate hike. And real quick, we're just going to touch on this one before we wrap up here, folks. I've showed you this chart quite a few times, but I know we have some new folks on the channel right now. which, by the way, folks, if you're new to the channel, please remember to hit that like button and subscribe to my channel when you're here. It really helps me out, and I would love to see you guys again on the next one. Okay, this chart right here, this is the chart everybody needs to be watching. U.S. 10-year Treasury, okay? And this is the chart that is going to tell us when the market wants to crash. Okay, what I did here, I drew this purple line, this descending line, all right? If you look, every time we have crossed over or touched this line, something in the economy has broken. This goes all the way back to 1972, okay? Forget this big spike here. This was Paul Volcker fighting the inflation of the 70s back in the early 80s. This is what the Fed says they want to do, but they can't do that, okay? Here, 1987, this is Black Monday, the biggest single-day decline in stock market history, absolute stock market crash. The next time we touched this line, 1994, the Japanese bond market collapse. It spread to the United States. Again, something in the economy broke, recession. The next time, 2000, the dot-com bubble bursts. Boom, recession. The next time we touched that line, 2007, 2008, the global financial crisis. Boom, recession. The next time was actually December of 2018. That was the famous Powell pivot. That's when I started realizing something was broken in the economy. That's when Powell went from tightening and quantitative easing to lowering interest rates, and then very shortly after printing money again. And then, of course, we had the unfortunate health scare. Every time in the last 40 years that we have touched this line, something in the economy has broken down and we've had a recession and a major market crash. Okay, every time. Now in 2018, we got a little bit above it, but you can see we're heading that place now. We're heading there. And right now, that line is at about 2.2% interest on the U.S. 10-year Treasury. Okay, and if they're saying 3 rate hikes, that is 75 basis points. That gets us to about up here. That gets us to about 2.5% just from where we're at. And that says nothing about the taper. That says nothing about all the new bond issuance that the Treasury is going to be doing. So my personal opinion is we may not even get that 3rd rate hike. I think the Fed will do it if they get the chance to, but I think the market is going to panic before that happens, and the Fed is going to give the market what they want. They're going to turn around, they're going to start lowering rates again, they're going to start printing money again. That's just my take. Anyways, when we get anywhere near this 2.2% threshold on the U.S. 10-year Treasury, that's when I start to pucker up. That's when I say, uh-oh, something's about to break. So keep your eye on this chart, folks. We get above 2%, the market starts getting a little froggy. We get above 2.2, I think something major breaks down. And Big Ugly MF, sir, thank you for the support of the channel and for the super, sir. I very much appreciate that, guy. Guys, all you guys who supported the channel, thank you very much for that. It's a very good feeling. It's very humbling. Thank you for that. Thank you, everybody who's watching. Thank you for your comments, for your questions. I think I'm going to wrap it up here. It's about 9 o'clock, so I'm going to go get a video done for today. Again, if you're new to the channel, please like this video, subscribe to my channel. Don't forget that notification bell. It really helps me out. Don't forget, use that hashtag Melonhead. And that is, according to my moderator, he says we've got to get that hashtag Melonhead out there. So please share these videos and tell all your friends about me. And until next time, live small and dream big.